Imagine turning a small investment, less than the cost of a dinner out, into a future that changes your life. Sounds big, right? Well, that's exactly what a few smart investors did years ago with stocks like Advanced Micro Devices trading under $2 and Monster Beverage stuck under $1. Those tiny stocks turned into household names. Today, we're going to look at 3 penny stocks trading under $2 that many people are ignoring. And the crazy part, they each operate in rapidly growing markets where small companies can explode if their strategy hits at the right time. Before we start, remember why penny stocks matter. You don't need huge capital to get started. What you need is research, patience, and the ability to understand which small companies will grow where others fail. And that's exactly where our checklist becomes powerful. Strong management, a scalable niche, financial growth, competitive moat, liquidity risk, valuation, and most importantly, the story of why this company survives when bigger players ignore them. Let's jump into stock number 1. This one is exciting. The company used to be called SolarBank and now trades as Powerbank Corp. The ticker you'll find on the OTC market is SBBCF, priced near $1.59. Powerbank is not just installing solar systems. They are building and operating commercial solar assets, which means they don't just build to get paid once. They generate recurring revenue from selling electricity for decades. That alone puts them in a different category from basic solar installers. Think about it like owning solar real estate instead of selling solar equipment. Here's where it gets interesting. The U.S. government is massively subsidizing renewable projects through the Inflation Reduction Act. That law makes it cheaper to deploy solar and more profitable for companies that own solar assets. This is why Powerbank's business model is scalable. When government policy pushes an entire sector forward, small companies can grow faster than giants because they are more flexible. In markets like New York and Ontario, SolarBank has already developed distributed energy resources. These projects are located near power consumption points. That reduces grid strain, increases energy independence, and makes it more attractive for commercial customers. Let's analyze the management. SolarBank's leadership team includes experts with long experience in energy infrastructure, not just solar tech. And they have skin in the game because many of them own shares. That tells you they grow this business for themselves as much as for investors. Now about growth. SolarBank's reported revenue in 2024 jumped significantly from earlier years due to completed solar projects and new contracts. Accelerating revenue is one of the strongest signals we look for. Margins on independent power production are also improving over time because once the solar system is built, costs decrease while energy sales stay consistent. Now the risks: Powerbank trades over the counter, which means less liquidity and potentially high volatility. Low trading volume means buying or selling in big chunks could move prices more than you expect. But that's also why investors who enter early benefit the most. If the company uplists in the future, valuation can change rapidly. At under $2, you are investing early in solar ownership, not just installation. The story here is simple. They build assets and own energy that people must use. If they keep expanding project ownership instead of only development, this becomes a passive income giant in renewable energy. Let's move to stock number 2, and this one lives in a sector that everyone keeps talking about but few understand: wireless connectivity at insane speeds. The company is Peraso, ticker PRSO, trading around $1. Peraso builds wave semiconductor technology. That sounds super technical, so let's break it down. Think of wave as the ultra-high-speed lane of wireless communication. It's what makes 5G capable of delivering the kind of speeds we see in futuristic tech industry automation, next-gen AR and VR systems, and enterprise wireless networks that replace traditional cable infrastructure. The key here isn't that Peraso makes chips. Lots of companies do that. The key is their narrow focus. Peraso is one of the few semiconductor players specializing in highly configurable wave solutions used in industrial applications. That's what the big semiconductor companies don't do. They chase mass markets. Peraso targets commercial clients that need specialized wireless solutions for defense, consumer devices, and ultra-fast wireless broadband. This is where small companies shine, by serving niches too small for giant corporations, but extremely valuable as they scale. Let's check management quality. Peraso leadership is made up of semiconductor veterans with decades of experience building chips and negotiating industry relationships. One of the biggest strengths they have is partnerships. They supply solutions to equipment manufacturers and software-defined networking firms. Many penny chip companies die because they lack partnerships. Peraso has them. This reduces market risk. What about financials? Revenue is inconsistent because product cycles and manufacturing contracts come in waves, but the growth opportunity lies in licensing. Once customers build products using Peraso's technology, Peraso can earn royalties without producing physical chips. That's scalable. It's similar to how ARM Corporation dominates mobile chips today without building any hardware. Peraso is trying something similar in the wave niche. Risks. Liquidity is low, and volatility can be extreme because semiconductor trends shift fast. If 5G adoption slows or if customers delay orders, revenue drops. But if the market accelerates, so does Peraso. When you invest under $2, you're not looking for a smooth ride, you're looking for asymmetric upside. You risk a little, you aim for a big return. Now let's step into stock number 3, Ovid Therapeutics, ticker Ovid, trading around $1.67. Ovid focuses on rare neurological disorders. Why rare disorders? Because pharmaceutical companies that figure out treatments for rare diseases get longer exclusivity periods, government support, and strong pricing power. The market might be small, but the margins are massive. And more importantly, small companies can dominate niches where big pharma doesn't focus. Ovid is working on epilepsy research and other central nervous system disorders. One of the interesting aspects of their business model is partnering with bigger biotech companies rather than taking full development risk. For example, they out-licensed certain drug rights, meaning they earn milestone payments and future royalties without taking on heavy research spending. That's a smart system for a small biotech. Less cost, high reward potential, and if the partnered drug succeeds, Ovid collects cash again and again. Let's check the competitive moat. Their drug candidates target rare epilepsy syndromes where competition is limited. Patients desperately need solutions, and doctors are waiting for new treatment options. Rare diseases are not just medical problems. They are emotional stories. When biotech companies become part of solving these stories, their value changes dramatically. Of course, there are risks. Trials can fail. Timelines can stretch. Revenue may take time. But remember, biotech stocks are asymmetric investments. You risk small, you aim huge. A successful FDA approval can change everything. And because Ovid uses partnerships, they are not burning cash as fast as typical drug developers. Now let's step back and look at all 3 companies with one question. Why will these small businesses succeed where bigger players do not? The answer is simple. Giants chase scale, small caps chase niches. Powerbank focuses on owning distributed solar assets. Peraso focuses on specialized wave solutions. Ovid focuses on rare neurological disorders. Each niche is protected by complexity, regulation, or specialized expertise, exactly the kind of barriers that form a moat. Before you invest, remember penny stocks are high risk and high reward. Liquidity, volatility, and valuation matter, but when managed intelligently, they offer opportunities big caps can't. Just imagine turning a tiny investment into something meaningful in your financial life. That's how wealth is built in the stock market, not by chasing hype, but by identifying small companies with big potential before the rest of the world catches on. If you found value, tell me which stock you want deeper research on. And if you want part 2, where I'll reveal more picks under $2 with real growth potential, comment part 2 below. Smart investing starts small. Let's build your portfolio the right way.